Rolling. Good day and welcome to the show once again. We are here today with Mr. Kashyap Javeri, Senior Fund Manager at Emkay Investment Managers Limited at our Fund Manager View show. Welcome Kashyap to the show.
Thank you so much, Kyra.
How are you doing today?
Very good, very good.
Good. So to start with, we had the budget recently.
Yes.
So what have been the impacting sectors according to you there, and what was the best outcome of the budget?
So I think, Kyra, the most important outcome of a budget 2024-25 has been that the government has continued with its own capex push. The fact that it's an election year and they didn't get bogged down by the populism as we would have seen, across many other governments earlier. They didn't get bogged down by that. If you look at the capex as a percentage of GDP for FY 24-25, they have already allocated almost about 2.8-2.9% of GDP on the capex side. Right. If you add to that, whatever budgetary allocations that will come from the state's point of view for next year, total allocation to capex as a percentage of GDP is going to be almost about 5.6 to 5.8%. By far, this would be the highest ever allocation to capex in the government budget ever in the history of in the history of Indian budgets. If you compare that with history, overall allocation to the capex has never been beyond 2.8-2.9% of GDP ever prior to COVID, right? So we are going to allocate almost twice of that budget in terms of capex for FY 24-25. What our honorable finance minister has also highlighted is that capex push is not going to be only for 24-25. It's going to continue for next probably 27, 28, 29 also. I think that's the most important outcome of this budget, that we are focusing on capex. We are not focusing on any wasteful expenditure in terms of subsidy or any other revenue expenditure. The second very important outcome of this budget has been that, or rather not only this one, but we have seen last 3 or 4 budgets, is that the government estimates on the revenue receipts or so-called tax receipts has now become more or less sort of plausible assumptions, right? So we are not now estimating some crazy 17-18% growth, then underachieving that number. Now there are realistic numbers which are coming in terms of budgetary receipts also. I think if you put this two together and look at the fiscal deficit number at 5.1% of GDP, that's going to be a phenomenal outcome for the economy as a whole, as well as for the markets. Because when you look at that 5.1% fiscal deficit and consequent borrowing number, I think there is enough money will be left on the table for private sector also to ignite or continue that animal spirit that it has shown in terms of its own capex. I think that's the single most outcome, I would say most important outcome of this budget.
Right, that was quite insightful. Moving on to what will be the sectors in focus for your investment strategies?
So I think taking into fact the account that the government is very focused on the capex side, having also seen Indian corporates, sort of continuing their robust or rather strong push to their own capex, I think capital goods sector is something which is going to be probably flavor of investments at least for next about 3 to 5 years. I think the sector that will also benefit from this whole thing is that though the focus is on overall capex side, the overall government expenditure is also going to grow at least about 9 to 10 odd percent, which means that there is significant push to the consumption that it's also this government is giving. Overall, if I look at generally the results which have come for BSE 500 companies until now, for the first 9 months we have seen the overall salary bill of BSE 500 companies also going up by at least a fairly high 10-digit number, right? Overall, that bodes really well for the consumption. I think within consumption, what we like a lot is discretionary. If you look at any of our portfolios, whether it's ENVI, whether it's Capital Builder, whether it's the Golden Decade Fund that we have recently launched, right. Consumption is getting a significant pie in that in all of our portfolios. And within consumption, there is one peculiar distinction that we have made, which is that we believe that within consumption, discretionary is something which is going to grow phenomenally well. So if you look at our Golden Decade Fund also, there is one key theme which is consumption, and within consumption, discretionary consumption, right? So, and what forms part of that discretionary consumption? We would be fairly, bullish on auto ancillary. We would be fairly bullish on anything which comes under discretionary, finished good consumption, which might include white goods. We have a fair bit of our weights in all our portfolios on building material, so on and so forth. White goods is something which is now looking up very exciting. When I say that, it's more like refrigerator, air conditioners, and washing machines. Something which is looking up very, very exciting right now. And a consequence of all this would be that when the dust settles down on the monetary policy, BFSI is also something that we will look at quite closely. And within BFSI now, it's not only banks which are something which are available for investments, right? Besides banks, you could do now. There are a lot of wealth managers which are listed. There are a lot of asset management companies which are listed. There are smaller banks or mid-sized banks which are coming up the curve quite beautifully. So that's something which is also available. So that's the third space where we will look at a lot of actions happening over next probably 4-5 years.
Moving on, Lok Sabha elections is the next big event coming up in the markets. So how do you think this will be impacting our domestic markets?
So, like our Honorable, Prime Minister said, recently in Parliament, right? Ab ki baar 400 par, and NDA at about 370 plus kind of a number that they are looking forward to. I think jury is yet out. Indian voters are probably one of the most, I don't know, for the lack of right word, let me use the word volatile. Yeah, they are most volatile in nature. So we would still keep our fingers crossed. But if the recent state elections are to go by, right? The NDA won in 3 states. There was one which went to the opposition party. In none of the 3 states there was announcement of any freebies, right? This elections probably were won fair and square, which means that you have a PM face which is doing well. You have a push on capex, which is now being understood well by the voters. In that sense, I think we can make a safe conjecture about who is winning these elections. Having said that, even if, let's say, the tide turns the other way, let's go back in the history and look at the example of 2004, right? In 2004, everybody thought that NDA is going to get another term down the line, next 5 years. India Shining campaign doing very well. Indian voter was thinking probably otherwise. In 2004, we had a government which was made with one of the lowest majority by the single largest party, and with support of some parties which, as capital markets, we may not have best outcome for us. Still, they continued with the same policies for next 5 years. You had global financial crisis which happened in 2008 and 9, and that's where the course of the whole budget changed, right? So I think even if there is a very slim chance of, let's say, upset happening, I think next 5 years, I do see the continuation of the same policies happening, in which case you might see a knee-jerk connection as and when that, those election outcomes, whatever slim major, chances of that happening, I'm saying, even if that happens, I think I would use that as a very, very strong buy opportunity, happening for the real investors. But like I said, jury is yet out. With probably some conjuncture, we can see who's coming, who's not. But even if there is a slimmest chance that there is somebody else who's coming, I think for next 5 years, these policies will continue to bear fruits for the investors.
Right. So talking about or looking ahead the next 3 to 5 years, what will be your key priorities at the Emkay Investment Management strategies, and what are the exciting opportunities that you see on the horizon?
So if you ask me what will be my, the key priority, my key priority would be to safeguard the investors against the exuberance that we have seen in valuations of some of the companies within some of the sectors, right? You can't have a market where a B2B company, quoting at similar valuations to a B2C company, right? A B2C company is more structural, secular in nature in terms of growth. A B2B is more cyclical in terms of growth. We have seen this happening in case of multiple sectors, right? We have seen this happening in case of chemicals. We have seen this happening in case of textiles, that when that exuberance comes and eventually the investors get shocked in terms of what earnings actually pan out versus what probably they were estimating. there is a severe underperformance which happens in some of these sectors, right? So my key priority is to safeguard the investor today against the exuberance which is happening in valuations in some of the sectors, right? What will be my, the key themes that we would like to play out? Despite being repetitive in my comments, I think the same sectors, right? Capital goods, discretionary consumer, financialization of savings. You would have now added some of the themes which could be, IT, ITES, and within that AI and digitization. That's where a lot of opportunities are coming up. And last not but the least, there is a significant emphasis which is coming from not only the government but global agencies in terms of how you control, global warming, right? And that's where a lot of opportunities are arising in terms of what is happening in terms of renewable energy and all the sectors which are connected to energy as a sector, right? Which may include capital goods companies in a lot of electrical or those equipments, a lot of EPC companies, and so on and so forth, right? So these are going to be 3 or 4 focus areas for us. But like I said, key priority: safeguard the investor against the exuberance.
Great. So moving on, for the benefit of our audience, can you throw some light or give us insights on how ENVI has been performing? Have there been any top 3 performing stocks there?
Yes. So we have been fortunate enough that our ENVI theme coincided with the whole Atmanirbhar Bharat, or the whole PLI scheme that our Honorable Prime Minister has been very vocal and a subject which is very core to his, which is very near to his heart. We were fortunate enough to launch ENVI at that point of time, right? In fact, prior to launching ENVI, we tried the same thing on a different platform, and it also did work really well there. So overall, ENVI has been one of the one more feather of success in EIML's story. If you look at since inception, we have delivered almost about 35 or let's say about 36% kind of returns, and outperformed the benchmark by almost about anywhere between about 300 to 600 basis points across various time periods. Fortunately, it's been a great strategy for us. Some of the stocks which have done really well for us, like I said, auto ancillary. So Mahindra CIE, which is something which has done really well for us. Capital goods, Voltam transformers, Elecon engineering, something which has done probably 2x, 3x, 4x kind of returns for us. And they have contributed significantly to this alpha that we have created vis-a-vis the benchmark. If I look at within building materials, not strictly building materials, but something which is quite related to the real estate market, which is Ultratech Cement, that's done phenomenally well for us. And how can you forget? Capital goods. Nobody can. You can't forget L&T, right? L&T has done phenomenally well for us. So right. So capital goods, auto ancillary, auto. And building materials, or let's say consumer discretionary, has done really well for us in the overall strategy.
Sure, that's great. That will be it for today. Thank you so much for watching the show, and don't forget to subscribe